this time to present my work for comprehending the influence of oil shock news. So the sentiment analysis in finance means that we can comprehend the sentiments or the tones as negativity or positivity in the human natural language context, such as the media coverage articles or the financial news, to integrate the relations between the news content and some security prices. For the conventional method to conduct sentiment analysis in finance, we can use the dictionary-based methods. So we can extract the positivities and the negativity words in the news articles. The two most popular methods we use are the Harvard-Lasswell General Dictionary. They can define the possible words and the negative words in the financial news. And also the McDonald and Lofgren Financial Dictionary is more of the tailored to the financial news, using the financial words to define positivity and negativities in the news. Some most pioneering work and most important literature include Taylor's work in 2007 and Gardner's work in 2013. Both find empirical relations between the sentiments in the news and the security price changes. But the large language model has been a very popular topic. For instance, the GPT models can help us to better understand the content or the information in the human natural languages. We can potentially better extract the sentiments in the financial news with the GPT models. And the financial GPT model, FinGPT, is the model that is fine-tuned with the financial news and better tailored to the text for the sentiment analysis in finance. It's fine-tuned with the financial news from Wall Street Journal and also some financial databases to better make predictions for the security prices from company news. So human natural language is a very complex sensitive text. So for instance, strike. Strike means a negative word in a labor context, in a labor market news, but strike can be a positive one in a sports news report. So that highlights the importance for a more nuanced approach to measure the sentiment or the tones in the financial news. So that is why motivates me to try to use the FinGPT to extract the sentiment in the news. So my data is based on 24,000 pieces of news on oil shock collected for the years between 1980s to 2019, obtained from Financial Times, New York Times, Wall Street Journal, Dow Jones Institutional News, and Weekly Energy News. And my focus is on the daily oil returns. So the response of the daily oil returns to the oil shock news. And I find that FinGPT is better in predicting the daily oil returns when the articles are worse in readability. So they are more difficult to read, or when the news articles have more uncertain tones. So the authors use more uncertain words when describing the events in the oil market. So I find a large language model, FinGPT, doesn't always produce the better predictive powers. It really depends on the comprehensibility of the text. So I use several motivators to test the relations between comprehensibility of the news and the usage of the large language model. So I use the motivators such as difficulty to read, which is defined by the Gaussian clock index. If the index increases, it's more difficult to understand the news article. And sureness is defined as the furnings in the tones indicate how sure is the author's tones, such as using the words such as certain sure, ensure means the authors are more certain about what's happening in the oil market. And number is the percentage of the numerical text in the news articles, such as the numbers 10 to 34.3. So the measurement for the sentiment in this oil shock news article is by using the prompt asking FinGPT, so what is the probability of classifying this piece of news article as positive, negative, or neutral? So for the regressions of the oil returns on the moderators and the sentiments and the interactions of the moderators and the sentiments, I find that sentiment, which is defined as negativity minus positivity, significantly changes the daily oil returns. The higher the sentiment, the higher the negativity means lower daily oil returns. And I also find that the moderator, such as the readability defined by the cost index and the sureness and numbers, also moderates the these changes in the daily oil returns. And the interactions for their significant negative coefficients suggest that when the news is more difficult to read, or when there's the more certainty in the tones, or when there's a higher percentage of numericals texted in the news articles, the decrease in the daily oil returns will be worse. So these three moderators reinforce the impact of the sentiments on oil return daily changes. And I also make a comparison between these two different approaches. So the first approach is to use the traditional dictionary to measure the sentiments in the oil news sentiments. So I use the Lofred and McDonald dictionary and also the Harvard-Lasswell dictionary to measure the sentiment. And the second approach is the FinGPT method. And I find that if I use the full sample with 3,900 observations, then I find that the prediction errors for the GDP is in the middle, so it doesn't perform better than the traditional methods. But if I split my sample into two parts, and I only focus on sample with worse readability, and then GBT has the lowest prediction errors, so the greater the predicting powers. And if the context has worse sureness, so they are less certain about what's happening in the oil market, then FinGPT also perform the best in predicting the oil returns. And when they are better or higher percentage of the numbers in the news articles, I find that FinGPT prediction errors is in the middle. So it doesn't directly relate to the percentage of numbers in the news articles. And when oil attention, which is defined as the investors' attentions in the oil markets, which is defined by the Google search trends in some keywords for the oil market. And I also find that GPT will produce the lowest prediction errors. So it has the best prediction powers. So oil return respond to FinGPT sentiments. But what about the individual companies' stock returns? Do they respond to the sentiments measured by FinGPT? So I can identify these companies with the tickers mentioned in the oil shock news. And then I match these individual companies' RFRs with the sentiments. And also control for the days of the week, and the dummy variable equals to when for coverage days. That means something happened on that particular day. And then RFR. AR is defined as the format branch for RFR. And we also have the cumulative 3-day we're finding alphas, also for the pharma branch, 4 factors. And I find that this doesn't lead to significant changes in the alphas. So the sentiment, where the coverage of something happen in the oil markets only lead to the changes in the oil daily returns. It doesn't lead to the changes in the individual companies' alphas. So I also find some other interesting findings. For instance, specifically, Wall Street Journal online edition, not the printed edition, and the Dow Jones Institutional News both contribute to the changes in the daily oil returns. And I find that there are no significant changes for the sentiments obtained from news articles on Wall Street Journal regional edition, such as the Asia edition. European editions were just the US Eastern predicted editions. And the sentiments doesn't seem to affect the implied volatilities when the trading volume were liquidity in the oil prices. And that's my findings. Thank you.
Have any questions? I think David question. You have a question?
Yeah, I have one question. What channels have you considered to explain this pattern you found in this study? You know, because the oil market is basically dictated by financial institutions who are professional investors, and they are not as easy as retail investors in terms of being affected by the market sentiment. So what is the channel your study?
So my understanding for this empirical result is that, so I know the market is dominated by the institutional investors. Maybe they can potentially explain why I find that only the Wall Street Journal online and the Dow Jones Institutional News, which is the database used by the institutional investors, have the significant impact on the oil return changes. So that can be partially explained by the fact that only the 2 sources of news can lead to the significant changes in the oil returns. And I find that the sentiment doesn't seem to affect the oil returns implied volatility, volume, or liquidity. So my understanding for this result is that this is because making the sentiments convey information rather than captures something such as the something like the investor sentiment or invested such as the retail investors sentiments. They try to make speculations where they try to find some arbitrage opportunities, but because these sentiments in the oil news, they really convey some useful information. That's my understanding of the empirical results.
Yeah, great presentation, and just one idea based on that, and something I want to run, because your focus is on sentiment analysis on the news. There's the commitment of traders report that we could look for institutional data, and then that gives me the idea of trying that.
Oh, you mean some reports on the
report, so you can see the institutional traders, the big guys, how they're trading, right? So that would be an interesting study. That's something.
Maybe they're preparing their positions for their own interest in the oil markets.
That would be something.
Oh, yes, I think there could be some very interesting kind of contributor to this stuff. Yes.
Thank you.
And also, yeah, so I agree with that. And also the production reports and all of those things, and not all of those news sources will carry those. Those are sort of more premium type information. So there's kind of an information curve, depending on what you're able to get here and maybe what you're able to get from other news sources. I would say that's one thing. And your sentiment calculation was sentiment positive minus negative positive.
Yes.
And we thought that Svetlana Borodska, I think, Borokova, sorry, has a method where you just use positive minus negative divided by neutral. So if you do the news, some of the news is very neutral and it kind of drowns out all this other stuff. So if you actually have also the negative divide by neutral, it's really a better signal. That's what I read in the white paper. It's online.
Yes, yeah. I would definitely need to include some additional information such as the production reports into this model control for the changes in the fundamental side in the oil market. Yeah, I think it's a very good advice. And also, I agree that I need to standardize the sentiments that is obtained from the FinGPT model. For sometimes the neutrality in the estimates can be quite large. And I need to standardize the negativity and positivity with the neutrality in this sense. Yes.